everyone. And hi, Robert. Great to chat. Okay, so I'll introduce both of us. So I'm Camila Russo. I'm the author of The Infinite Machine, a book on the history of Ethereum, which you can pre-order right now on Amazon. I'm also the founder of The Defiant, a content platform focusing on decentralized finance. And Robert Leschner is the founder of Compound Finance. Compound Finance is a lending protocol based on Ethereum, and it's the second biggest lending protocol in DeFi. So Robert, I wanted to start with talking about the state of the DeFi market and then diving into Compound itself, if that sounds good.
It sounds great. Excited to be here with you at Ethereal, and let's dive right in.
Cool. Yeah, okay, so you obviously have a privileged position leading Compound, like I said, one of the biggest DeFi projects out there. And so what are you seeing in the platform with how people are using it? We're obviously, we've picked up from the really low lows of March. Value locked has, slowly but steadily been increasing again. So are you seeing people going long ETH? Are you seeing maybe people borrowing tokens to short? Maybe people are thinking things have already been gone overvalued? What are you seeing?
Yeah, so we're seeing four things in aggregate, and I'll walk you through each of them. The first is that Compound, along with most of DeFi, is still in an extremely early stage. When we look at where it's come from over the past 2 years to where we're at today, it's still extremely small and it's still extremely early. So that's the first piece. The second is that Ether is still the dominant form of collateral. Whether you look at Compound or you look at MakerDAO or you look at other platforms, Ether is still by far the most dominant backbone of the DeFi ecosystem right now, both in terms of DEX trading volume, as well as collateral used in Compound and other protocols. Third, we've seen interest rates mirror that of the traditional financial system in their decline over the last couple of weeks and months. Right. So right now, interest rates in DeFi are at essentially an all-time low. And in some ways, that's lagging behind what's happening in other financial markets. And lastly, what we're seeing is this new excitement and this new spring and this new activity sort of returning to DeFi coming from a lot of different places. One, it's coming from the decentralization of Compound and the handover to the community of control of the protocol. Two, it's coming from the launch of new DeFi applications. We're sort of entering this magical moment where there's a huge number of applications launching all around the same time. And lastly, it's coming from the return of asset prices. We're seeing this in Bitcoin today, we're seeing this in Ether, and we're seeing this in the asset prices of crypto in general. And all of that's coming together to create a really large tailwind for DeFi right now.
Nice. Okay, so I want to dig a little deeper in that. So I agree that DeFi is definitely growing. It's encouraging. Value lock doubled last year. And like I said, it's picking up, but it hasn't been like a huge rally into DeFi, even as all these things are converging. Why do you think that is? I mean, this is a really nascent space. It's super fascinating. It's achieving unprecedented things in finance. It's open to everyone. So I don't know, you would expect faster growth, like sort of more exponential growth, but we haven't really seen that. Why do you think that's happening? Maybe rates are too low and it just isn't bringing people in right now?
Well, that's absolutely one component of it. I think the other thing to look at is the total number of users of DeFi in the aggregate. And that's not growing rapidly. And it's because there's still a lot of frictions for what I would call a widespread normal user to be able to come into DeFi. It still requires a pretty high level of technical sophistication. And it requires you to, essentially still get your hands pretty dirty. We've seen roughly a total number of users in DeFi growing, but not growing extremely quickly. So I think the biggest hurdle is making it as an entire industry more accessible to a much larger audience, which means building better on and off ramps. It means building easier tools, better UXs, simpler experiences in order to really grow the total number of individuals interacting with them. And so I think when that happens, we're going to see significantly more volume. Right now, it's still dominated in a lot of ways by the early adopters, by the whales, by the most sophisticated users. And so when we can open up DeFi to a much larger audience, we're going to see significantly more usage.
Yeah, absolutely. I think that's necessary to bring in more people, maybe easier on and off ramps with fiat are key. It's just really hard still to get just like into the door and using these applications. By total number of users, which estimates are you looking at? Like, what would you say is the total DeFi market right now?
Yeah, so it's easiest to look at Compound as a system. I've seen other numbers for Uniswap, for Kyber, for Maker. These are all sort of the largest projects. There's a couple ways to look at it. One is active users, so who's using the protocol actively, as opposed to a historical aggregate, as well as what are the total volumes moving into these protocols. I actually prefer to look at users as opposed to volumes because at the end of the day, we need to move away from an ecosystem in which it's dominated by early adopters. And so, users of all of these are growing to unique users. In terms of active users, a lot of them are flat to up. At Compound, we have about 20,000 active users right now versus, a lot than that historically. But that's still within DeFi, puts us in the top 4 points.
Right. Okay. And going back to the point about rates, so there have been times in DeFi when rates are close to 10%, and that's kind of been the battle cry to get new users in. But do you think that's going to be kind of the main thing driving people in? And if that's the case, how can the DeFi continue to compete when there's more liquidity and yields are increasingly converging with traditional markets?
Yeah, that's a great question. So there's a couple of things that I think bring people into DeFi. One of them are interest rates that are competitive with what they're earning in an offline world. If your bank is offering you 0.5% and DeFi is offering you 6% for a dollar-like asset, it's a no-brainer. If it's 0.5% versus 1.5%, the frictions of going from the traditional financial system to DeFi and back again are probably excessive. So rates are absolutely a factor. But, there's always a silver lining to each side of a coin. So low rates for suppliers of capital translates to low rates for borrowers of capital as well. So I actually think the next wave of users might be attracted to low rates from the other side. It's people who are looking for cheap capital. And in a bull market, which it looks like we're rapidly returning to, I think you're going to see a lot more enthusiasm for new products and new usage from borrowers. So rates do play a factor. The other thing I think that plays a factor in sort of attracting users into DeFi is simply the accessibility of it. In a lot of ways, the user experience of DeFi hasn't evolved that much over the last 2 years. Certain products, I think, have innovated wildly. I think Dharma is a great example of a product that, as a user, it's built on top of DeFi. It offers you DeFi interest rates, and you don't even know as a user necessarily that you're using in the back end a DeFi application. It just feels like a convenient wallet. So I think the more applications that launch with a focus on the economics, but not the flows and not the technical interactions, DeFi is going to scale and succeed very rapidly. So I think it's a big opportunity of growth in the next 2 years. And lastly, what attracts people to DeFi is self-custody and control of their own assets and the ability to interact with products that they don't have access to. And that alert is actually improving very rapidly. So in terms of the number and type of products that people are starting to have access to, from complex derivatives to savings accounts to simple trading abilities that they wouldn't otherwise have, that's increasing significantly. And I think that will bring in a new type of user, especially as other assets are exposed to DeFi. We're starting to see great experimentation from projects doing synthetic assets and looking to bring traditional assets into DeFi to allow users to hedge or speculate on the prices of not crypto assets, like equities and commodities and currencies. And I think that actually has the potential to bring in a large number of new users as well.
Right. And I'm also excited about DeFi bringing in people when it's doing stuff that traditional finance just isn't able to do. You know, when we have, you know, things like Pull Together or Savior, that you just, you know, it's just really hard to get that sort of product on traditional finance. So maybe that's kind of another avenue.
Yeah, I'm excited to see people create applications that have never been conceived of yet. Like Pull Together is a great example. On the bottom, it's Compound, and it's an interest rate empowering an entirely new product that most people have never tried.
Yeah. So speaking of applications built on Compound, it seems like, you know, they've all been really focused on that mainstream user. But I remember like very early on when you were about to launch or just launching and we talked, you were like very much focused on like whales, like very experienced traders. So is that kind of the next phase of users that you want to bring into Compound, maybe including like other features that are geared towards those like more like power traders?
So I think a different way of framing this is, you know, who do we view as the users of Compound? At this point, we view developers as the users of Compound. And our role is to encourage and facilitate other people in the space building applications that want to access a liquid interest rate, either to earn an interest rate on assets they hold or to be able to borrow assets they don't yet hold. And so for us, I think there's a whole spectrum of different end users that are able to access these markets, from whales to retail to institutions to new financial products to Compound being a building block in entirely new smart contracts. But for us, all of that comes down to encouraging the community to build these products and helping them build these products, as opposed to our team building out these new experiences.
Right. Okay. So you'll just provide the building blocks and let developers decide like where are they targeting their applications, basically. Yeah. Okay. And then I want to talk to obviously your latest big development with governance and comp tokens. Can you kind of explain your bigger vision with this and tell us about how the first like couple of weeks of community-led governance has gone?
Yeah. So our vision for why we're decentralizing the protocol is very simple. We have two goals. The first goal is we want the protocol to live forever. One of the biggest obstacles for the protocol living forever is having a single team that's the administrator of the protocol. There's a risk that, you know, we go rogue or we're kidnapped or, you know, someone fat fingers, you know, a contract or something horrible happens and you have a single entity that is an administrator of the system. It's one of the biggest downsides of most traditional financial institutions and products is, you know, you have one entity that can mess it up for everybody. And so the first priority is removing this centralized entity from being able to mess up the protocol so that, you know, there's nothing stopping it from living forever. And the second is facilitating the community to upgrade the protocol. So when there's only one entity able to make changes, development is slow. Development is limited by the creativity of one entity. When development is open to the entire community, you might see a much faster pace of development and upgradability of the underlying system. So the two goals, one, let it live forever, and two, make it upgradable by people that aren't us. And so the comp token does this. What we've done is we've essentially broken up the admin key of the protocol into 10 million comp tokens. And we're distributing those 10 million comp tokens to the original developers of the protocol, some of the entities that funded the development of the protocol originally. The community is going to be by far the largest holder of the keys over time. And by doing this, we're basically distributing the control of the underlying system. And so, you know, the idea is very quickly already we've turned on compound governance. Right now, the comp token now runs the protocol. There's still a limited number of stakeholders that are responsible, but you can think of it now as like a 60 entity multi-sig instead of a one entity, admin.
Right.
Changes to the protocol. And
Mm-hmm.
we designed the system so that anybody who's a material owner or voter in the system is able to propose changes to the protocol. So in the first 2 weeks, we've actually seen 2 proposals created. One by our team to test out the underlying mechanisms of decentralized governance. And the second proposal was created by an application built on top of Compound. I'm actually most excited by the second, which is an application built on top of Compound proposed a change to the protocol. Now, why is this mind-blowing? So throughout history, there's been all of this talk of platforms. It's dangerous to build on top of Twitter or Facebook or Google because they can yank the rug out from underneath you. You can't upgrade, a platform that you're building on. They make the rules. This demonstrated by having an application built on top of Compound, propose and implement an upgrade to the protocol that were flipping the script entirely. And that instead of there being platform risk to build on top of Compound, there's the opposite. There's platform upgradability, which is when you build on top of Compound, you become responsible and able to upgrade the protocol for yourself and for everybody. And that's, I think, one of the most powerful features of decentralized governance that we're looking to demonstrate. And I think is going to change people's minds about what crypto and what DeFi and what Ethereum is capable of, and why it's a safer and better platform to build on than traditional financial markets.
Yeah, it definitely does turn kind of management upside down, like traditional corporate management upside down. But it still doesn't it still pose the risk of these applications taking over the protocol, and still, if it's not centralized around management of the protocol, it can become centralized around an application. Maybe there's one application that figures a way to gain control of a majority of comp tokens and just changes the rules to rig the protocol in its favor and maybe push out its competitors.
That's certainly a possibility. And it's going to be really interesting to watch this unfold over the next 20 years. We've designed the basic principles of compound governance to allow essentially a very creative governance process to unfold, where there's not clear expectations about how it's going to work yet. It's going to take a lot of time for something like that to occur. And the governance system has a lot of time to react. So, one of the things that we haven't announced yet is exactly how we're going to distribute the majority of tokens to users. But over time, the users of the protocol are going to have more and more and more influence. And it's going to be interesting to watch where influence goes. Do they want to support applications? Do they want to support exchanges? Do they want to support custodians? Do they want to support themselves? And who winds up with control over the protocol and why? I think based on some of the early decisions that were made in terms of how the system is built, it's going to lead to a concept of slow governance, similar and inspired in a lot of ways by Bitcoin, which there's not that many changes and they're not occurring very frequently. But when they do, they wind up receiving majority support, or it becomes extremely contentious. And I think we've started to build some of the basic parameters of the system to lead to what we hope is a slow governance. One that isn't meant to have weekly conference calls and weekly changes and doesn't have lots of rapid fire modifications. But when there's an important enough upgrade, it can be proposed, debated, upgraded, and implemented by the community. Okay,
I guess that ensures that nobody kind of takes over the system, but it also, the downside is it makes it maybe less flexible, or just like obviously slower to change. But okay, so you mentioned the distribution of comp tokens to the broader community, and I know you haven't disclosed any details, but is there anything that you can tell us about that timeline? Anything else that you can disclose that you haven't given much details on it?
Yeah, of course, and we're waiting until the this mechanism is code complete and audited and be able to be reviewed by the community before we announce it. But in a nutshell, every single user of Compound is going to wind up with comp governance tokens to be able to participate in compound governance. And this is exciting. In terms of why we're doing this, it's so that there's a widespread distribution of people that are able to participate in the protocol. A lot of systems, they start off where, the users aren't able to participate, or they come super late, or there's some other mechanism of distribution. We want every user to have a say. And every user of Compound is going to have a say. And the governance structure is designed as liquid democracy. So users are able to participate in governance themselves, or, and this goes back to maybe an application winds up having influence, they can delegate their tokens to any other address. And this can be a DAO, this can be another address, it could be a friend, it could be Camila, it could be an application that wants to participate in governance. It's going to allow a very liquid democracy to form, where some people participate and some people elect others to represent them in Compound governance. And it's going to be really exciting. I think it's going to create this, explosion of creativity around how to run a protocol once this goes.
And so, for example, if I own a CDAI, does that count as being a user? Will I get comp tokens for just owning CDAI?
Yes, that's right. So
nice.
Everyone who has yes.
Okay.
Yes.
Cool. All right. Okay. And then I also wanted to ask you, there's you've been asked this before, and you've given kind of different types of answers. So will Compound issue a stablecoin? Is that in the plans? Is it being talked about at all within the team?
So we get asked this question a lot, and I don't think we've ever given a different answer, but I'll give the same answer we usually give. So there's a lot of reasons why the community would be excited for Compound to create a stablecoin. It's a system that enables people using collateral valued at market prices to borrow an asset. And there's very little difference between borrowing one of the assets that's already supported and borrowing an asset that doesn't yet exist. It would be very trivial for the protocol to create a stablecoin or synthetic asset. We have no plans as the developers who built the protocol to launch a stablecoin. But as Compound governance takes over, anyone in the community can propose upgrades to the protocol. They can write the code that would upgrade the protocol, show it off to the world, debate the merits of it, and eventually have it integrated into the protocol. So in a future state, I could see the community doing the work, debating how to create it, and creating a stablecoin from Compound. But it's not something that our team that originally built the protocol has thought about at length.
Okay. Would you like to see that happen?
I'm trying to be as neutral and unbiased as possible. Once we start to roll out the Compound governance token to our users, I actually don't want to limit or encourage the community in the direction that it wants to go. So, and you're not going to see, myself or the developers that originally built the protocol trying to influence what happens with it. I'm just excited to see the community try whatever they think is best. And, changes won't occur instantly. You're probably going to have to convince the rest of the community this is the right direction for the protocol to go. But anything is possible. All of the power of what used to be a centralized administrator is now in the hands of the comp governance token holders. And the number of comp governance token holders is going to increase to 20,000 as soon as every user winds up holding it. So we're going to see lots of ideas, and it's going to be really exciting. And I couldn't tell you with any degree of certainty whether or not there will be a Compound stablecoin a year from now or 10 years from now.
Okay. And then this is something that I've wondered about, especially with the recent hack with the copied Compound code. So your part of your code is under copyright, and that it's understandable, but it also seems to kind of go against some of the principles of DeFi. To have it be like a completely open financial ecosystem. So just trying to understand why you made that decision to have some of your code be under copyright.
So all of the code to Compound is able to be inspected, audited, reviewed, and researched by the community. So the principle that we're guided by is that anyone can see how Compound works. They can verify that there's no funny business. They can monitor all balances, all transactions. They can see all the things you would never see with a traditional financial product. We, for very specific reasons, don't want the code to be completely free and open source because it enables anyone then to essentially take the code and try to build their own application with it. Launching a system like Compound or any DeFi application requires considerable thought paid to security towards understanding all of the risks of the system and to being extremely diligent and responsible. And we actually don't want anyone to be able to just take it off the shelf and then say, like, I've launched a compound-like product. We think that's extremely risky and extremely unsafe. And we saw what happens when you take code that you don't necessarily have an understanding of because you didn't build it yourself, and then you allow users to interact with it. It leads to losses, which, our number one priority is the security of DeFi and the users in it. And we think the standards for launching a DeFi product have to be higher than they are today.
Yeah, I guess the hack kind of proves your point in that way, at least. Okay, and then to wrap up, want to hear kind of your just like big picture for Compound. Where do you hope to see it in a decade or like 20 years from now?
Yeah, I hope that the community winds up really embracing governance and takes it in directions that I haven't thought of. I would love to see the community just get creative. Think about integrating with other blockchains in some ways or whatever way is possible, with Bitcoin, with Cosmos, with Polkadot. I'd love to see the community, take what's been started and just extend the reach of it and try things that we don't even know about yet. Maybe it's a stable coin. Maybe it's new interest rate markets. Maybe it's, connecting it to, an exchange in some fashion. I have no idea. So I don't know what 10 years from now is going to look like. I just hope to be surprised.
Nice. Very cool. Okay, it was great talking, Robert. Thank you so much.
Thanks, Camila, and thanks, Ethereal.